Every seller has the same fear. Am I leaving money on the table if I price too low?
Yep. Or am I killing my chances if I price too high? The fact is, both will cost you time and money. Sean and Kelly here, Price and Price Group of Samson Properties, and let's dive into this.
So this is one of the biggest decisions you have to make as a seller, and it's usually based on emotion and not logic.
That's true. That's true. So we're going to talk about the first scenario of pricing too high. I would say 90% of sellers that we sit down with, they have the mindset of pre-COVID where you price your property too high so there's room to negotiate. And then in COVID, it was price it as high as you want to because there's going to be multiple offers.
Right.
So both of those mindsets are still present today.
Yeah, and it's not true because in today's market, if you price too high, it really sits there.
What do we mean by price too high? There is a market value for each home, and it could be priced too high for the actual market value of that style of home and that location, or it could be priced too high for the condition of your specific home. So there's several factors that go into that. But what happens if it's priced too high? What's one of the first things that's going to happen?
You don't get the traffic.
That's
You
right.
don't get the attention. It sits too long. Then it gets stale. Then they lower the price, but then buyers think, what's wrong with it?
That's right. That's right. So if you think like a buyer, if you were looking at a property and you walked into this house and you fell in love with it and it was the first day on the market, what kind of offer are you going to give that property? You're going to give that property a good, strong offer. But if you walk into this house, and even if you fall in love with it, but it's been on the market for 60 days, you're going to start thinking, okay, what's wrong? I know we can get a deal.
Right.
The sellers have got to be motivated and so
And not only that, but your agent is probably taking you to other properties
Oh,
within
yeah.
your price range,
Yep.
and you're seeing that comparison,
Yeah,
right?
absolutely.
I mean, they just come from another property that's priced $25,000
Maybe
under
with
this
more
one with
features.
more features, or
Yeah.
staged better, the location's better,
Yeah.
all of that.
Yeah, and something to think about as a seller is when you go on the market, that first week especially, but maybe even into 3 weeks in this current market, that first 21 days is when you have the leverage. Because there's a chance you could get multiple offers. There's a chance that a buyer might still be inspired by the fact that you're having open houses, and I think that they might have to compete, so they'll give you a strong offer. Once you hit that 14 to 21 day mark, you lose that leverage, and the buyer now has all the leverage. So they're going to have contingency. They're going to extend settlement dates. They're going to negotiate with you
Right.
on the inspection. The appraisal is going to be harder to convince.
Yeah.
So there's a lot of negatives that comes with that.
And I think we have a really great example
Yes. Yeah.
for
we're gonna-
this, and this is a great location too. So the
Yeah.
location of this is not a problem.
A fantastic location, and it's a matter of condition, is what the problem is with this property.
Condition tied to the asking price.
Right, exactly. Condition tied to asking price. So similar square footage homes, similar location homes,
Similar age.
similar age. We're going for a certain amount. We're going to say 2 million. Okay, we're going to throw this number out there.
Okay.
Now these are not the actual numbers. So similar homes are going for 2 million, but this specific home had a kitchen that wasn't quite updated. It had bathrooms that weren't updated.
The owners put a lot into a couple of key areas
Yep.
that look fantastic. They're
Yeah.
amazing. But then there are more than a couple areas that they didn't put anything
Yeah.
into. And they're like things that make you go, huh?
Yeah, and there are homes very close to this because it's a very close
Yes.
community that have all those things and are priced appropriately.
Yeah.
So those are the homes that are selling.
And
This
the
home has
seller-
actually caused these homes to sell.
And the sellers will say, but have you seen this room that I
Mm-hmm.
put so much into? It's better than that one. Yes, it absolutely is. But even though all of their property, all of their rooms
Mm-hmm.
are high-end mediocre, and you have a couple of areas that are high-end done well, you also have all the other areas, or
Yeah.
some other areas that are like, what?
Yeah, exactly.
And those are not inexpensive things, and that just puts a bad taste
Yeah.
in a buyer's mouth, especially when it's priced too high.
That's right.
So I just want to say that if you're a seller and your agent is a top producing agent, they know how to do it, right? If they have a listing that isn't selling, it means they have a seller who hasn't listened.
100%, 100%. And what's the outcome of that? The outcome of that is, in this example that we have, the price has come down. We received an offer. They got close, but the two parties
But
wouldn't
they
move.
dug in.
They dug in.
The
Then-
sellers dug in.
Then the price came down even further. They had another offer. Sellers kind of dug in, and now they're way down here versus where they thought they were here, and they're below where they should have been if they had just listened up first.
Their first offer, when they were priced way too high, that first offer that they wouldn't come down on is actually higher than what they are now willing to list it for.
Yeah. So,
And
and
so that's where we say it's emotional, right? They're incredibly intelligent. They have really great style. They're wonderful people,
Yeah.
but it's an emotional thing, and you don't pay your agent to give you advice that you don't take.
That's right. So that's what's going to happen if you price too high, even
Yes.
in this market, even though it's a seller's market, you cannot price too high. So let's go to the opposite. Let's talk about pricing too low.
Okay, so let's flip it.
Okay, let's do that.
Okay, now the concern is, but what if I price too low?
Yeah, and what if it sells at that low price, right?
Yes.
Okay, let's take an extreme example first. We have a very clear answer to what that question was, but let's talk about an extreme example. There was a property that was put on the market, it was on the MLS, and it was in Sterling, Virginia. And it was put on at 200,000. This property was easily worth 700,000. So, of course, every buyer is calling us, and so much energy and so
So
much
it's
traffic.
2019.
Yeah, we ended up going to see this property. I took like 3 buyers at one time because the other thing they did is they only had a 2-hour window for
There was
people
a,
to see
there was
the
a
property.
line. Is this the one there was a line?
Yes. The neighborhood was full on 2 or 3 blocks back. We had the park like 2 blocks out. And everybody was trying to find spaces. This house was absolutely packed. This house was in horrible condition. It was priced at $200,000. The after repair value on this house, which is where if it was fixed up totally, it would be about 700,000. So that fear of pricing too low, all of this activity, even the investors came in here and they ended up bidding that thing up to about 650,000. So, which was way too high for that condition. An investor couldn't buy it at that because there's no room for
If
profit.
they had priced it at 650,000,
There would've been
I don't think
none.
there would have, like, the people who would have gone to look, they wouldn't have offered on it.
That's right. So the short answer to the fear of what if I price too low and it sells there? Well, that was the market value. That was what it was going to sell at anyway, and you could do it quickly or you could chase the market down. But what if I price too low and it's worth more in this market, even a neutral market, especially a seller's market, you cannot price it too low because it will get bid up.
Yeah, I think you're going to see now what we're telling our buyers is when you see a listing in our area and you see the price there, that is strategic pricing. It is lower than what the majority of the properties out there are expected to go for.
Yeah.
It is priced low, but it's strategic. And so we have to really tell them to keep that in mind because that's not how it was
Yeah.
a year or so ago.
That's right. And as an example, we just had a listing, the condo that we just did. The market value on this property was $241,000. The 2 properties that had sold at that $241,000 mark had both been priced at $225,000. So we knew strategically the buyer pool was at $225,000, so that's where we had to price. So we priced there. Within a day and a half, we had multiple offers. She actually sold it at $247,500. So she got $6,500 above what the market value was of that property because of the demand that was created.
Right.
So in this market, it was a well marketed property. It was in good condition. She
Yeah.
prepared it right. So in this market, you can price a property. It's going to get it up.
So I'd say just change your mindset on I'm pricing it too low and it's going to sell. That is scary.
Yeah, that is scary. It's
And the
scary.
thing, I don't know if everybody understands that what you list your house for, if you get an offer for that price, let's say you list your house for $450,000 and someone offers $450,000, you don't have to take it.
That's right.
Just because you're
That's
putting it
it.
out there, that is not an offer you've made that you're bound to. You can decline those offers, you can counter those offers. That's something that
That's
you
it.
really have to keep in mind.
You brought this up a second ago with regards to this specific seller. She's in a situation where she's moving sooner than she had thought. And so her net at that $241,000 sales price was only going to be a couple $1,000s. So she did not have room to come down or she was going to lose money on the transaction. So going at 225, she could not have sold at that price.
Right.
Okay, so bottom line, does this mean that you underprice everything? The answer is kind of, but it really depends on the data. You have to know where the buyer pool is. You have to know what it's going to take to get that property sold at your goal. Does this mean aim high and hope? Absolutely not. If you aim high and hope, you're going to end up just living with hope, and hope is not a strategy.
No, it is not.
So the goal is you have to use strategy. You have to use data. You have to use numbers. You have to do this based on market
Yeah.
statistics, not emotion.
Yeah. Pricing too high can cost you time and money. Pricing strategically
Yes.
can maximize both.
Yeah, absolutely. So if you're considering selling, if you're having questions about the market or in your situation, reach out to us. We'd be happy to sit down with you. Even if you don't end up working with us, we'd be happy to just,
But you should.
yeah, absolutely. We'll give you a lot of information. There's a lot of value to show you where you should go on the market at.
That's right.
Yep. So give us a call at 703.
783-2143.
That's right.
Hey, everybody.
Sean and Kelly here, Price and Price Group of Samson Properties. And what are we talking about?
It is time for our weekly market snapshot.
What's
That's
happened
right.
in the Northern Virginia real estate market in the last 7 days in under 10 minutes. I'm bringing it up to 10 minutes. We never hit
Hi,
it.
we do a great job. This is
But we
always
have-
so
But
succinct.
we have to hit, well, this part is, but then we also hit the contract trend. So it always goes up.
Okay,
Yeah.
whatever.
All right.
Okay.
So we're going to dive into the stats for this last 7 days. And Kelly, I'm going to let you take it from here. Go for it.
Okay, so that top graph, the black squiggly line you're looking at, that's the buyer activity. That's how many homes have gone under contract in the Northern Virginia, Fairfax, right?
Mm-hmm. Yep. Fairfax
County.
County. Yep.
In the last 7 days, the squiggly teal line, that is the seller activity. That's how many new homes have hit the market in
That's
the same
right.
time frame,
That's
same
right.
place.
That's right. So that's our supply versus demand ratio. And you can see that they have been staying pretty even over the last several weeks. A little bit of an increase in inventory, a little bit of an increase in buyer demand. So if you go down here to the buyer's market versus seller's market, this middle line right here is a good neutral market. Anything above is seller, anything below is buyer. And we've kind of flatlined. We've flatlined into a good, strong seller's market, but it's also a fair market because it's not as chaotic as it has been in the past.
And it looks sort of similar to the same time last year.
Yeah, it does. It does. Maybe a little bit higher, but we'll see. We'll see if it
Yeah.
lowers down over the next couple weeks. So we're going to dive into the contract trends next. But what we see here and what this means is, again, like we said in the last couple weeks, it's a fair market for buyers. There are situations where you're going to have multiple offers. We've had buyers that have gone into that situation this last week. But you're also going to have opportunities where you can get a property without multiple offers and get all your contingencies and be totally protected. So
Yeah.
it's a good market for sellers, top market value, good market for buyers because you can still get protected.
Yeah, and buyers, if you're really needing to make the most of every dollar, make sure your agent is looking at temporarily off markets, things that have just recently been withdrawn. If it's something that you might be interested in, then ask them to reach out to that agent. We just got something under contract that was off market because our buyer was willing to put in a little bit of sweat equity, and they got it for way under the market value. And the reason is they hit it just before the seller was about to have some renovations done and then list it for $50,000 more.
Yeah, that's a really, really good point. Yeah,
Thank you, Sean.
absolutely. Yeah, look for those off-market deals. Also, your agent can market the neighborhoods for you if you find a neighborhood
Yeah.
you really like.
It takes work, but a good agent
Yeah.
is going to work for
Yeah,
you.
that's why a good buyer's agent is worth it.
Yeah,
Yeah,
that's right.
absolutely. Okay, all right, let's dive into the contract trends.
I love the contract trends.
Okay, so let's dive into the contract trends of what we see for the last 7 days here in the, we're going to focus on Northern Virginia specifically, but you can see we've got all the trends for the whole area. This is market data from 269 contracts from Cardinal Title. And you can see that here in Northern Virginia, 49% of the contracts went under contract higher than list price, so almost half of them went above the market price. And then coinciding with that, down here, 50% of the properties went under contract in the first 7 days. So we're starting to see a normalized trend there that if you can go under contract in that first 7 days, most of them are going to go over asking price. And then you'll see down here, 19% of the contracts went at listing price, whereas 30% went in 21 days or less, and then 20% went under asking price, 20% went over 22 days, and 31% went under asking price. So we see a little bit of an interesting split right there in that we see the days on market at 30%, but then we see that the contract price, that some of those days on market that were under that 22 days still went below asking price. So it's kind of an interesting swing there a little bit. So we'll just kind of see how that trend continues. Next, we're going to see that we're still sitting about right about 2/3 getting their finance contingencies and 2/3 getting their appraisals contingencies. So again, this is really a good favorable thing for buyers, that the majority are still getting their contingencies for protections. And then same thing in the inspection contingencies, 64% had it. And as Kelly and I have been noticing, of this 36% that did not have the inspection contingency, most of them more than likely did a pre-offer inspection to make sure that they got the protections and still wanted to write an offer on the property. So it's good for buyers. They're getting their protections, and sellers are getting top dollar. So that makes this a fairly fair market. You can see that financing versus cash, that 84% were financed here in Northern Virginia. Again, buyers who are buying with cash feel like they have leverage over financed clients, but unfortunately, it's really not the case. The only advantage that buyers have is they can close quicker and they can waive all their contingencies, including appraisal. Cash buyers can do that, and most financed buyers, if they follow the right steps, can actually do the same thing. So there's really no advantage to being a cash buyer. And I only say that to cash buyers so that you don't think that you can automatically come in and start undercutting, because a lot of times people think when they're offering cash, they can go in at a lower price point, but that just doesn't have the leverage that it could in other markets. Seller subsidies, this is where the seller actually gives some money back to the buyer to help with closing costs or repairs or something along those lines. 17% of the contracts had seller subsidies. And then here's a very important number for both buyers and sellers. 98% of the contracts had the seller contributing to buyer agent compensation. So buyer agent, our buyers, your agent, most sellers, 98% of them are helping cover some of your commission that you are contractually obligated to pay to your buyer's agent. And sellers, you need to be prepared to contribute to that buyer agent compensation, because if you don't, then those buyers, if they can't afford to cover the closing costs and the down payment and the buyer agent commission, they will go to one of the 98% that will help them cover that buyer agent compensation. Okay, if you guys have any questions at all, please feel free to reach out to us. The number is 703-783-2143. Have a great week out there.